This is another company that's been up huge. It's up 360% this year.
Major volatility for several AI infrastructure stocks this winter as Wall Street's predictions vary wildly.
I think it's fair to say we don't know what the value of these data centers is going to be.
MarketBeat's Chris Markoch shares a list of 3 AI infrastructure stocks to continue watching over the next few years of the AI buildout.
1 to 2 year outlook for these stocks, because that's how long it's going to take to really get this build out done. After that, that's when you're going to have to see, is the demand there and is that demand sustainable?
Chris, so great to have you back on the show talking about the hottest topic of the year. That's going to continue to be a hot topic next year, and that is AI. But we are looking specifically at companies that are helping to build out the infrastructure for AI. It's a topic we've talked about before, but why is this so important to keep exploring for investors?
Whether or not we're in an AI bubble seems to be based right now on this idea of there isn't going to be demand to meet all of this data center build out that we're doing. However, I don't think that question's really going to be able to be answered until we have that AI infrastructure. And right now, from what we've seen this earnings season, hyperscalers like Microsoft and Meta and Amazon are showing really no signs that they're going to be slowing down in building out these data centers. So that implies that at least what they're seeing is that the demand is there, but first we have to get the infrastructure built. So that's why these stocks are the right stocks to be in right now.
Really good point. You do have to first build the infrastructure to actually prove that thesis or disprove it. So interesting point. These are stocks, a couple we've talked about before, but it's a really great time to bring them up again simply because of how much moves all of these 3 stocks have had in the last few weeks. Before we get started, quick note, this is not financial advice. We are just here to give some stock ideas and discuss why these might be an interesting place to consider for a long-term investment. All right, Chris, let's get to that first company you're looking at for AI infrastructure.
So the first company is one we've talked about on the channel many times, and that's Applied Digital. Ticker symbol is APLD. This is a play on data centers. What separates Applied Digital from some of the companies that we're hearing about right now is they already have multiple long-term AI hosting agreements in place. So that means that analysts have a line of sight to long-term revenue visibility more so than some of these other small cap data center names. That's what separates Applied Digital. They also just recently announced the successful and on-time ready for service RFS for the second phase of its Polaris Forge 1 AI factory campus in North Dakota. And that's the first of 3 contracted buildings on this Polaris Forge campus. And it's the first one to operate at its full 100 megawatt capacity. So obviously Applied Digital spiked on that news. It's up about 15% in the last week. Right now, it's trading a little bit above the consensus target for it. But from what I'm seeing, the consensus price targets have been moving up. In fact, at the end of October, Needham and Company has given the stock a target of $41, which is about 25% higher than where the stock's at right now. And there's other analysts target that are even higher than that 41. So it seems that analysts are moving up their targets right now. And the stock has actually been moving kind of against the grain of some of the pressure that's been on some of the AI data center stocks.
Yeah, this one is so interesting to look at as a chart. Like you said, it's been up the last few days, but wild volatility the last few weeks. Let's talk about what's behind that volatility and what that could mean about the company's future.
One thing that I've noticed is that the stock does have about 31% short interest on it. So some of the recent rally may, and I say may, be coming from short covering. It may just be that some of the shorts had to cover their positions once this announcement was made, and that could be fueling a little bit of this really isn't a short squeeze, but it could be fueling that idea that the stock has to go higher because the shorts are covering their positions. That being said, Stock's up over 308% just this year. So there could also be some profit taking going on right now, Bridget. We never know. But what I am saying is that the recent announcements that the company's made suggest there's nothing fundamentally wrong with the business model. Again, this may just be a case of a stock that got too high too fast, and there may be some profit taking and or short covering going on.
I think one thing to talk about with this one is looking at the chart we and
Sure.
all of the short-term moves is one discussion, but talking about the long-term potential for this company is kind of how I want to end the discussion on Applied Digital. Is there still a risk long-term of whether or not the idea of AI data center as kind of a mall that
Mhm.
companies can rent space in, is that idea and that concept going to work long-term and pay off long-term, or is there still a risk there? What are your thoughts about the long-term future of Applied Digital and their business model?
Yeah, so I think I go back to where we started here on the video, and I'd say the answer is really going to be almost impossible to answer. You have to build out that infrastructure first. And I would take my lead from, again, the hyperscalers, the companies like the Microsofts and Metas, who are saying, we need this with these data centers, we need this capacity. So the short answer is yes, obviously, there's a risk that at the end of this, there won't be the demand that they thought, and therefore there won't be the need for as many of these data centers. However, at the same time, you have a company like Applied Digital that's already secured some long-term contracts. So it's an area that you might have to be careful with in terms of saying in the next maybe 2 to 3 years. But in the short term, the next 12 months, I think you're fine with Applied Digital.
Yeah, but definitely expect that volatility to continue. This is one of those riskier stocks in the market to look at right now. Another of our MarketBeat writers recently put together a pretty interesting article on Applied Digital, looking at both the potential upside in the future and some of the risks over the next few years. If you want to dig a little deeper into that perspective, you can scan the QR code or click the link in the description to read that full article. All right, Chris, your first company was a major AI data center play, and the second stock you have for us today has a really similar story.
Right. So this company is Iron Limited. This is another company that's been up huge. It's up 360% this year. But unlike Applied Digital, this stock's been really taking it in the last month. It's down like 32% in the last month, 5.5% or so in the last week. But there's a little bit of an easier reason to understand, but it also may be something that makes some investors nervous. So Iron used to be just a Bitcoin miner, okay? And in recent years, they've been pivoting to be part of this AI infrastructure and data center plays. And one of their unique selling propositions is that all of their data centers are being powered by renewable energy, which is great because, again, energy, the building the data center is one thing, having the energy to power it is another. However, that's where the risk comes in with Iron, and that's where I believe the stock has been getting walloped over the past month is. And that is the company uses the revenue that they generate from Bitcoin mining in part to fund the rest of their operations. That works very well when the price of Bitcoin is going up, as it has for most of this year. Not so much when the price of Bitcoin is going down, as it has in the last month or so. And so I believe that if you probably overlaid the Bitcoin chart with Iron's chart, you're probably going to see a pretty strong correlation there. Now, having said that, in the last few days, the price of Bitcoin has been rallying a bit, and there is some thought that maybe we're at the end of this cycle with Bitcoin. Maybe Bitcoin's getting ready to rally into the first part of next year. That would be bullish for Iron. But again, this is one of those plays that they have some contracts and it looks very positive for the company long term, but in the short term, there's going to be some volatility.
I'm curious to see with Iron. There's so much to break down here, but the first thing I want to ask is, will this company continue to be tied to that Bitcoin story, or are they going to turn into more of a AI infrastructure pure play where there's not as much of a tie to Bitcoin?
I think that might happen down the road, but I don't think that's going to be part of it in the next, again, I think in the next year or so, no, because they need the revenue they're getting from Bitcoin to help fund the build out of their infrastructure. So in the short term, I don't see it. In the long term, yeah, it may be something where they start generating enough revenue from the organic data center business that the volatility in Bitcoin won't be as much of a problem. But for right now, yeah, Bitcoin's going to be an issue for them.
All right, that's an interesting point to make about iron. Also, need to pull up this chart simply because you mentioned
Yeah.
it's down quite a bit right now, but it was up
Yep.
quite a bit within the last few weeks. What is behind that volatility?
A company like Iron that is so dependent right now on revenue from Bitcoin, not 100%, but still they're largely dependent on Bitcoin revenue. They're going to be impacted by the price of Bitcoin. And it went up this year because the price of Bitcoin went up strongly this year. It's now giving back some of those gains as the price of Bitcoin is down.
Yeah, this another interesting point to look at just in the data for iron is what analysts are saying compared to what analysts are saying about
Correct.
applied digital. Again, these companies are two very similar concepts, and yet analysts seem to be far more bullish on the future outlook for at least price action on iron.
Some recent price targets are a little bit more bearish. I mean, JP Morgan raised their price target recently, but it comes in well below where the consensus price is. So there may be some rethinking of that going on as Bitcoin has slumped. But again, I'm not necessarily thinking the pullback in Bitcoin is something that's going to last forever. And when that price recovery happens, I would expect, again, you're going to see a rally in iron stock.
I think one final thought for this one, we had a guest on just this week who was talking about really the market catching up with trying to figure out what the value of this new
Yeah,
technology is. AI infrastructure is new.
right.
It's very new. Bitcoin is not new. It's been around for a while, but these mining companies are still relatively new. So is this volatility and extreme price action and moves in the stock and variety and analyst predictions kind of a part of that story of we're not quite sure what the value or future value of this company could be?
That's the part of the argument actually that reminds me a little bit of the dot-com period, and although I lived through that, I think it's a lazy parallel to say that what's going on right now is exactly like the dot-com era, because the dot-com era was like something we had, like, never seen before, and this AI revolution, while it is certainly very unique, right now, it's one of those things that you have to build it first, and that's what these companies are doing, and that's why I think they're maybe more interesting investments right now than some other AI plays.
Well, they are building it and spending billions to do so. I think
That's
that's one of
true.
the things with this build out that has some investors a little concerned is just the massive amount of cash it takes to
Right.
build the infrastructure. And that really leads into that third company you have for us today, one of the expensive parts of building out the infrastructure.
Yeah, so the last company on this list is Vertiv, and the ticker symbol is VRT. So once you have these data centers built, a key factor is going to be you need energy to power it. Using that energy 24/7 as these data centers require generates a lot of heat. It means you have to have a way to cool it. That's not anything different than what has been going on for years as we build out cloud infrastructure and other things, which is why companies like Alphabet are building in areas where they have access to hydroelectric power and such. So they need ways to cool these data centers that are giving off this massive amounts of heat. That's where Vertiv comes in, because Vertiv is the leader in liquid cooling technology. And as these AI generated workloads generate all of this heat, traditional cooling systems have a trouble keeping up. Liquid cooling systems can be maybe 3,000 times more efficient than those conventional systems. And so that's where the opportunity is for Vertiv. Analysts are forecasting that liquid cooling technology demand will grow at about a 20% compound annual growth rate through the rest of this decade. And that's a reason why analysts for Vertiv have been raising their price targets for the stock.
Yeah, let's talk about that future price target and compared to where it is now. Again, this stock has not escaped the volatility of the other two as well. Where is the future from where we are looking at right now as an entry point?
If investors are looking at it right now, they're going to see Vertiv's trading slightly above the consensus price target, and that's because it's been up 45% in the last 3 months. It's up 60% year to date. And unlike some of the other technology companies and AI stocks that have been kind of rolling over a little bit in the last month, this stock's held its gains. It's still up about 1% in the last month. However, if you dig into the details a little bit more, you see that several analysts have been raising their price targets, and those price targets are pretty well above that 178 consensus target. I see Cowen has 211, UBS Group has 201. So Citigroup has 199. You're seeing analysts raising their targets. I would imagine that means that the consensus target's gonna rise a little bit as time goes on. This is a company, unlike some of the other ones, it doesn't have that much short interest, so you're not gonna have that headwind on it either.
I think the difference with this one compared to the other two, the question, the risk with the first two is they're investing the money to build these. We don't know if they're going to be
Right,
filled or sustainable and actually pay off with that investment. Vertiv is a part of that building. It's the investment that Applied Digital and
right.
iRate are making in Vertiv, right? So they're going to be a part of that build out. The build out is happening. But what does that mean long term for Vertiv? I think in the short term, it logically seems like Vertiv would have business because these build outs are happening. But do you think that's going to continue long term?
Well, I think at some point you're gonna see the revenue and earnings normalize a little bit. Right now, they're going through probably a little bit of more of a hyper growth phase because the demand is so strong. I think over time that demand's gonna normalize, and that may make Vertiv maybe less interesting as an investment. But again, we're talking about opportunities right now, and I think that's why Vertiv is a good opportunity. You're also seeing a lot of interest in some traditional utility companies. You're seeing, companies like large caps like AEP and Duke Energy and companies like that. 1 to 2 year outlook for these stocks. This is kind of the sweet spot, probably through the rest of this decade is still strong because that's how long it's going to take to really get this build out done. After that, that's when you're going to have to see, is the demand there and is that demand sustainable?
I think that's a great point that these are long term plays in the term of a few years long term, not 10
Right.
years. I think 10 years from now, it's impossible to know where the
Right.
AI market, the AI infrastructure could be.
Right now, Bridget, that's a great point. We're looking at opportunities for investors in the moment. I'm not looking at these stocks and saying these stocks are trades, but I also don't think these are stocks that you buy and hold with the idea of saying you're going to buy and hold these as forever stocks. They may turn into that someday, but right now I think you've got to keep your eye on the ball and say, this is where the money is going. That's what makes these good investments in the next 2, 3, 4 years. After that, you're going to have to be watching it and say, okay, maybe it's time to take your profits along the way and really manage these investments accordingly.
Great point about timing. I do think that short term, near term of the next few years is really what's going to matter for these stocks. When it comes to which one to add to Bridget's buys, I'm not sure. This is a really hard one. I've been a fan of Applied Digital before. I was more of a fan of it when we were talking about it pre
Right, right.
$10 before it really took off. And I think had we been talking about this, a couple of weeks ago when Applied Digital was down around $20, I would have added it to my
Mhm.
watch list then. But I think right now I'm going to go with a different direction for what to add to the watch list. And I think I'm going to go with Vertiv. It's a little less volatile, a little less risky, it seems, simply because I do think logically they're going to get those contracts over the next few years. So in the next few years, I think Vertiv's going to be very busy. I don't know what that means long term, but I think there's still some room for growth and a little bit more dependability. Again, that's just my own personal thoughts. It's not financial advice for you to consider. It's just kind of what I'm thinking. What do you think about that thought process, Chris?
I think that's a great thought process, Bridget. And one of the reasons I think so is because Vertiv has kind of been the slow and steady choice. You see Applied Digital and Iron, they're up about 350% or higher for the year. And that just means, again, there's a lot of volatility there. Vertiv, it's still up 60% for the year, which is very strong growth, but that growth seems to be a little bit more manageable. Right now, I like the chart setup. It just crossed over its 50-day simple moving average, which that 50-day moving average has been acting as a support level for it. I think this is a good time to be getting in on it. And again, especially if as we're thinking, the market may start to rally towards as we head into the back half, this last month of the year.
All right, very good, Chris. Thank you so much for bringing this topic to us again. It's
Yeah.
been a while since we've talked about AI infrastructure. And as we saw, a lot has happened with these stocks. Let me know what you're doing in the AI infrastructure world. Are you still in or adding to your position in any of the companies we talked about? Have you been in them already and early? And are they still performing really well for your portfolio? I'd love to hear from you in the comments. And let me know what you think about this Bridget's Buys addition to my watch list. It was a hard choice this time, so I could have gone a lot of different directions. I'd love to hear what you think in the comments. Thanks for watching, everyone. As always, happy investing.